So, should you be paying taxes as a producer? Don't know, should you? I'll tell you that. What is going on, people? Welcome back to another video. If you are new to the channel, my name is LLB, and today I'm going to be talking to you guys a little bit about taxes, whether you should pay taxes, when to pay taxes, how to pay taxes, because I know there's been a lot of confusion, and especially when you start up selling beats. I will explain everything in this video for you guys so you know exactly when you should start paying taxes and how to go about doing it. So stick with me to the very end because you don't want to miss out on any of this, because towards the end we dive into some things that can save you a lot of money in the long run. Okay, so this is kind of broken down into two sections. Section 1 is paying taxes and section 2 is write-offs. So taxes are basically what you would pay to the government out of your wage, out of your paycheck. So basically you never see this money, it goes straight to the government. It's money that you've worked for, but you don't get to keep. You sort of pay that to the government for your citizenship, I guess, or if you're in the UK, to pay for the NHS, which is, you know, medical care and medical insurance and all that kind of stuff. So that's basically what taxes is. Now, if you have a regular job, if you're working a 9 to 5, this is kind of taken care for you, so you don't really have to worry about it. When you get a paycheck, you'd see how much you were paid, how much was reduced as taxes, and it'll all be on a full breakdown. But if you are selling beats online, or you've just got your own business, you need to take care of all of this by yourself, and it can get daunting. However, this is kind of an easy way to break it down, especially if you're a beat maker. So basically, if you run your beat business through BeatStars or Airbit, so I'm going to assume the majority of you are using PayPal to deal with money transactions and all that kind of stuff, and you're making, I think it's above 20k a year, PayPal will report you to the government. Not report you in a bad way, they'll just highlight that that this account is making 20,000. I'm not sure what the conversion rate is, but it's $20,000. So, you know, converted to whatever you're working with. Now, if you're nowhere close to making 20k, it doesn't matter, just keep watching, because if you start to make some decent money with it, then you really need to pay attention to this, because if you don't, you might get in a lot of trouble for it. Normally, the government take a percentage, it's roughly around 15% depending on what country you're from. I'd highly recommend you go and check that out, but for safekeeping, we're just going to go with a number of 25%, because 25% is the upper limit to what the government tends to charge you in terms of taxes. So basically, if you are making around 20k, I wouldn't even wait until you're making 20k, I'd wait until you're making a lot less than that, so 10k and above, just to be on the safe side. Then you need to start putting tax away as the transactions come in. Now, what I mean by this is, if you make a beat and sell it for $100, put 25% of that $100 away into a separate account. So open up another current account, savings account, whatever, and put 25%, so $25 of that $100 away into another account, so you can't touch it. Now, you can do this as sales come in, you can do this once a week. I would recommend doing it as the sales come in, that way you don't miss out any transactions, and at the end of the year, when you come to pay your taxes, then you can just have all that money set aside, and 9 times out of 10 you'll have more left over if you're putting around 25% of each transaction into a separate account. So just to recap, you get $100, put 25% of that away, so $25, put it into a separate account, you keep $75, and you put $25 away for tax purposes, and any leftover money can just go back into the business, which I would also highly recommend. Now, I know what you're thinking, how the hell do I pay taxes? Again, this varies depending on what country you're from, so you need to go on Google, type in whatever your country's from and type in government, or type in whatever country you're from and type in taxes, and the government website for your country will pop up. Get in contact with the head office or whoever you need to speak to, and then you just sort of go from there, and they'll walk you through the steps as to how you go about paying that. But basically, they'll get all that set up for you, and you'll be sort of notified of when you need to pay your taxes once you've done that. Now, that is the main part about taxes, so it's really important that you are putting money aside every time you make a sale to pay your taxes, because if you sort of get in money trouble later on down the line, and then the government come chasing after you because you haven't paid your annual taxes, you know, it could be upwards of, 10, 15k if you're making a lot of money, then, you're going to get in a lot of trouble for it. So it's super important that you just stay on top of that. It is difficult to do, but if you do it gradually, so let's say for example you made $1,000 every month. This is just the whole number for me to work the percentages out. But let's say you make $1,000 a month, you put 25% of that away, so you put $250 away every month. You're gonna have $3,000 put away for taxes. That $3,000 is gonna be sat in an account, not touched. You have that money safe and ready to pay for taxes. The government comes along and says, you need to pay 15% tax on your revenue for the year, which is awesome news for you, because if you've been putting 25% away, you've got a lot of money left over to invest back into the business, to treat yourself to a nice holiday or whatever you like. So that's really important that you guys get your head around taxes. Now the second thing, write-offs. This is where you guys can save a lot of money if you start paying taxes, and where a lot of people have gone wrong with paying taxes and paid way more than they should have. Write-offs is basically anything that you purchase for the business, you can then claim that as a write-off, and they will deduct the amount of your annual revenue, the money you make for that year. They will deduct that from that total amount, which means that they charge you less tax at the end of the year. So let me give you an example. So for music producers, if you had bought a new laptop, you bought a new MIDI keyboard, some new headphones, a new camera, and you spent around, let's say, I don't know, 2K on new equipment. You make sure that you keep all the receipts for those purchases. Make sure you keep all the confirmation emails, the order emails. Make sure they're all documented and put in the right places, in a safe place, so that when it comes to the end of the year, you can tell the government when they ask for X amount, when they ask for 10% of, I don't know, 20K. So they ask for $2,000 in taxes. You can then present them with all the purchases you made for the business using the money that you made. So you minus that 2K from 20K, that's 18K. They will only charge you tax on the 18K. Okay, I hope this is making sense. So basically anything you buy for the business will be deducted from your tax that you'll have to pay. So instead of paying 10% on 20K, which would be 2K, you would only pay 10% on 18K. So you're saving $200. Okay, I hope that makes sense. I feel like I'm just rambling on now. But yeah, that's kind of like as best as I can explain it. I'm trying to figure out a way to explain it that doesn't confuse anybody. But write-offs is super important because you can save a lot of money in the long run. Okay, now that pretty much covers everything that I wanted to share with you guys today about that. Again, if you're not making anything anywhere near to that, if you haven't even started selling beats, then this is going to be useful for you down the line. So if you do start making a lot of money, come back to this video and make sure that you are putting money aside for taxes. If you don't, things can turn pretty ugly. What will happen is PayPal are obviously going to have tabs on your income. They will report that to the government. The government will then open an investigation on your account. If they can see that you have not been paying taxes, if they see that you're not paying taxes, you can be prosecuted and actually sent to jail for, I think it's 5 years is the maximum. You do not want to let that happen. Make sure you are putting money aside. Make sure you've got your finances in check before you start blowing it on fancy cars, Gucci belts, Gucci t-shirts, Ferraris, you know the drill. But yeah, that is all for today's video. Again, if you found some value from this video, make sure you hit the subscribe button, drop me a like, leave me a comment, hit the bell so you don't miss another upload, and I will see you next time.